When we look at services, and I look at Apple's announcement today of the cities where they want to expand, Seattle, which is big in software, but data center and data in general, Austin as well, where they've got a lot of customer service build out. It seems like this is a services-driven growth strategy that they've got. Even if you expect services growth to dip in the near term, isn't there a sign that Apple's investing in it for the long term and potential there?
Well, it's clearly part of the long-term story. In fact, when we look at Apple, most of what we're looking at for the growth is going to come from the services business. It's a very broad business. It's not just App Store. It's a Google relationship. It's the extended warranties. It's the video services, music. So clearly they have a lot more to go on services and on the software side, but we do think it's going to slow in the relatively near term.
And so, Lou, if you're looking at taking money out of Apple and putting it somewhere else, what are the areas where you would suggest that investors put it?
I think there's lots of areas to deploy that capital. It's not just in tech. I mean, sure, we're pretty bullish on tech and a lot of disruptive change that's going on within technology, the digitization of everything, the need for more network security, things of that nature. But you also find lots of opportunities within areas within the consumer sector. If you think about the change in the auto fleet and the electrification and automation of vehicles today, within internet retail, how that continues to grow as well. And then within healthcare, I mean, there's so much innovation in disruption going on within the healthcare space. Think of robotic surgery and all the new drug discoveries that are helping cure big diseases that are going on. So lots of opportunities, better growth opportunities in our view than Apple at this point.
Ben, I want to dig into this price target cut on Apple just a bit more, because you do make the argument for slowing service revenue, even if it is in the near term. What is your argument there, especially given the fact that so many of the other cuts we've heard about have had more to do with shipments rather than services?
I mean, I think a lot of people obviously focus on the hardware side of the business. It's a critically important part of the business. It's the most important part. But there's also been this growing story around services for about 4 or 5 years now. And it's been a very bullish story. We still like it long term. It's still a very good business. It throws off a ton of cash. But in the near term, we are concerned that you are going to see some slowing of that growth. One of the big issues here is that Apple, even though they're this massive company, they're actually quite levered to growth in apps and particularly games in China. And as the game market in China slows and there are some restrictions from the Chinese government, that can impact this company in a way that people don't necessarily understand.
So Ben, are we likely to see in the next year or however long, you give a time frame, the degree to which the services business really is tightly tethered to Apple's hardware sales and specifically iPhone sales? I mean, so much of it, while it's called services, is transactional off of the App Store, and I don't think it's clear how much room Apple has to expand revenue and profitability in that business, aside from what's happening with iPhone unit sales.
Well, it is somewhat disconnected from iPhone unit sales, because don't forget, they actually can benefit from used iPhones as well, in a way that, again, most people who look at Apple don't necessarily understand or build into their models. If someone has an older iPhone, they can still access the services, particularly when we're talking about China and other Asian markets and some of the developing markets. They're able to sell a lot of these apps on services on these phones that they're not necessarily selling new. So they can still build their installed base despite the fact that iPhone units themselves will be flat or down.
Lou, I just want to get this straight too, because I know you just mentioned some other areas that you think could be potentially good investments right now. Even with the drop in Apple stock, you don't think it's a buy here?
We still have a buy on the stock.
At this point, I think it's fairly valued, but I think there's a couple of narratives out there that I think you have to question to some degree. And one is that services, there's this expectation that they can grow 20 to 25% pretty consistently. And I question that, particularly when unit sales are declining. The other narrative is that Apple, it trades at too low of a multiple, and it should trade like a consumer products multiple. And I disagree with that completely. Consumer products companies trade at higher multiples because they're consistent within good times and in bad. And it's hard to envision Apple's sales continuing to increase, being able to sell $1,000 plus iPhones if we do head into a recession. So that's certainly a risk, and it's a reason why I don't agree that that multiple should expand to anything more than it is today.